We're live. Woo!
This is the energy we need every day, not just today.
Well, we have to have you come on every day then.
We'll
New
see.
segment, everybody. I'll let everybody stream on in, my friends. This is our favorite time of the day, and that is the time where we go live. Ah, yes. I see you, Sadia. Sadia says nice. Appreciate you folks so much. Stream on in, stream on in. We have an excellent show in store for you folks today. So we're going to be talking about how accessing DeFi was a little bit complex and a little bit fragmented, especially for institutions navigating on-chain finance for the first time. And so today on Avalanche Live, we're going to explore August Digital because August Digital specifically is changing that, offering seamless access to multiple DeFi protocols through one unified platform built for institutional scale. And of course, to help me do that, I'm joined by some absolute stars in the building today. We have Vera, Senior Investment Associate over at Blizzard Fund. Say what's up, my friend.
Hey guys, good to be on here.
Hey. Thank you so much for being willing to pop on. Super excited to for this discussion that we got going on today. And very excited for another star that we have in the building here. We have Aya Kantorovich, co-founder and co-CEO of August Digital. Say what's up, my friend.
I'm just trying to think about how you sell this business better than I do. Like this is incredible. I need this kind of introduction all the time. What's going on?
Also, I
What's
feel like
up?
we gotta tell people. I know that people were expecting Lydia, but I'm filling in for her because she's quite sick today. But hopefully, people aren't too disappointed that Lydia's not on.
We're
I'm sure
stoked to have
everyone
you on.
we're stoked to have you on. Very disappointed that Lydia is sick, but for everyone out there in the comments, if you can just comment, get better soon, Lydia. We really appreciate that. We appreciate the love you folks send out. But I guess just to get things started here, um, obviously, you've had a very impressive journey. You started off from Pantera Capital, building the institutional desk over at Falcon X, and now you have co-founded August. Can you talk a little bit about some of those pivotal moments or key learnings from your time at Pantera, and that ultimately kind of led you to build out August?
Yeah, absolutely. First off, thanks so much for having me and hosting this. It's such a great space to both listen from the community and be able to talk about why we're super excited to be building in the ecosystem. Primarily for my journey, it started at Pantera in 2018. So this was really the early days of crypto when it was actually very difficult to buy anything in size. And what I mean by that is if you were looking to buy Bitcoin, for example, anywhere between 5 million plus in size, Coinbase and some of the exchanges didn't really have the liquidity for you to get it without enormous amounts of slippage, very bad pricing. And so at the time, the issue was fragmentation, but in centralized finance, CeFi. So fragmentation across exchanges, OTC desks were just starting to really pop out and become popular, and then fragmentation between exchanges and those OTC desks. And so coming out of Pantera, it was very obvious that we needed to bridge the gap for institutions to be able to get access to any majors really in size. And so that was the birth of FalconX, an aggregation mechanism in order to do that. And what we noticed, and interestingly now in DeFi, what we noticed is typically, institutions will come in and say, I just want to trade majors. I understand Bitcoin and ETH, and that's the only thing I want to dabble in. And then we would get a call from that same institution 6 months down the line being like, hey, I want to trade a, 200 market cap token, and I want to go further down the risk curve. And so we're actually seeing that shape into the kind of trading that institutions are doing on chain now too. So with FalconX, started off with the majors, started off with stables, and really expanded that across the wide range of tokens through the DeFi blue chip summer and into the following NFT and meme craze. People trading things like Farcoin and what have you. And so that when I left FalconX. That was a month before the FTX collapse happened. There were a lot of concerns around centralization risk, right? Lack of transparency and lack of the ability to underwrite your counterparty risk. And so that was a big focus for me. How do we build a prime and aggregation layer with, the on-chain mechanisms that exist today that have outlived all of the large market movements and volatility in the past near decade. And so that was really the focus for August. August at a high level is that one platform where you can trade, borrow, lend, execute across not only DeFi, now also CeFi, and really get capital efficiency and cross margin at scale. And so we're seeing that same issue that we saw in CeFi in DeFi. Fragmentation, when you're on the Avalanche ecosystem, think about all of the different protocols as a user you need to click buttons in order to get exposure to. And that's a very painful user experience. And so how do we make it a very seamless experience for you to just have that one-click trading, get liquidity across protocols, not have to sign all of these transaction signatures in order to get those executed. And that's really the main focus for us today.
So actually, I want to back us up a little bit too. I want to talk a little bit about why you think that the kind of mindset of these institutions kind of changed. Originally, they're kind of a little bit more, hey, I just want to trade Bitcoin and ETH, but you're saying that now they've been a little bit more risque. Can you talk a little bit about why you think that mindset might have changed?
Yeah, absolutely. And I will say Avalanche has best positioned itself to transition a lot of these institutions
Mm.
over the risk curve. And it's twofold. The first is yield, right? There are higher yields on chain for specific assets. And at the end of the day, institutions just want access to that, right? There's nothing to say that, you can either have 10% yielding opportunities here, or maybe a 25% yielding opportunity here. And so what an institution will say is, how do I underwrite that risk? And then how much should I price that risk? And is it worthwhile for me to take on that risk in order to get that additional yield? And so we're seeing a number of institutions going through that thought process. And that was the exact same thought process that happened at FalconX that we're seeing on chain, is that, okay, I got access to the major tokens, but then this token went up 300%. How do I get that same exposure, right? And so, people just want access to cheap capital and high yielding strategies, and that's consistent whether you're a retail individual or an institution. We're all humans, and so we want to make money. And the second piece I will say is around access. So if you think about, there's two sides of the institution. There's the institution that's tokenizing their products and bringing those on chain, and then there's the individual that is looking to get access to net new high yielding assets. For the institution that's tokenizing those assets, this is a net new market for them. So if you think about why BlackRock got excited to put BUIDL on chain, Apollo, some of these other, private credit funds, the reason they're excited about tokenization is because now they're able to sell their product into a user base that they couldn't sell into before. And so they're able to expand, the TVL, the AUM, the amount of users they're selling into, make money off of that. And so that's very profitable for them. If you think about, BlackRock, I mean, that's BUIDL has been, the most profitable ETF out there. So, these are things that are going through a lot of these asset managers' mind around, okay, how do I access net new markets? How do I expand the people I sell into and expand my product globally? And then the second is for the institutions that or high net worth individuals that are looking to get access to them. So if you think about, for example, equities, something that's been really exciting that the industry has been trying to do for a while is, how do we get tokenized equities on chain? People want access to Apple, they want access to Fang, or whatever the new Fang is. They want access to SpaceX, and you've seen companies like Back.fi. You've seen the announcement with Republic recently. All of these things are because if you think about folks in America, perhaps you can get access to that very easily. But if I'm trading out of the Philippines, it's very hard for me to actually be able to access these in, a small dollar size amount. And so the second bucket, I would say, again, the first is net new users, and the second bucket is access. And so we're seeing that play on both ends.
You know what? I really appreciate you for kind of giving us this glimpse, almost to kind of the behind the scenes of the kind of mindset of these institutions. Because prior to speaking with you, I would have thought that they wouldn't necessarily care about the more higher risk yield opportunities that we kind of see on DeFi. But after speaking with you, like, if they're getting excited about these kind of more memeier, these kind of more memeier adventures, I'm kind of excited too. I mean, I thought there was only a DGen in me, but apparently there's a DGen in you. There's a DGen in all of us.
There's a degen in everyone. We've talked to institutions who are trying to trade on Polymarket.
Awesome.
I mean, that is some degen behavior. Trying to market make on Polymarket. We've talked to institutions who are, trying to market make on some of these like NFT meme coin platforms. So it all boils down to yield at the end of the day and return on capital. And making those returns in traditional finance might be a little bit harder than making some of those returns in crypto. If you're able to, one, underwrite the risk, two, manage the risk, and three, have the security and tech in place to execute it properly.
Can we actually talk a little bit about kind of the challenges that you've been kind of seeing, like for traditional financial institutions as they've tried to bridge over to kind of the Web3 world?
Yeah, I would say, the same challenges exist as they do for retail, which is, great technology takes a very long time to build. And I don't think anyone in DeFi would say that the user experience is phenomenal, right? It doesn't feel like when you're trading on Robinhood, and it certainly doesn't feel like when you're trading on Charles Schwab or with your prime broker at Goldman Sachs. And so, I would say that there's still the onboarding and learning curve of getting up to speed with smart contracts, being able to underwrite some of these assets, oracles, the behind the hood on all of the technology needed in order for you to have a seamless experience and being able to underwrite risk is really challenging. And that's, been an opportunity for us because that's where, we build the toolkit in order for those institutions to come on chain and do a lot of the hand holding for them to get in size. And then the last is the liquidity, right? Hyperliquid has been a great example of a lot of that liquidity coming on chain and being able to find opportunities that exist on chain versus on exchanges. But I would say at a high level, liquidity is still pretty fragmented. It's fragmented across chains, it's fragmented across protocols, it's fragmented across pairs. And so that fragmentation makes it very challenging to be able to trade in institutional size. And when I mean institution, that's nomenclature that people use all the time, right? What is an institution? I would say if you're crypto native, you have a fund of 150 million. Sure, you can definitely trade and make returns on chain. But if you are a multi-billion-dollar institution, then there's absolutely no liquidity in size for you on chain today. And so it's what do we need to do as an industry to make that user experience more seamless in order to get the billion-dollar user on chain? That's the big question we're all kind of chasing after. But that will take time, and it's not going to happen immediately. And the new technology pops up in this industry every single day. It's incredible. And so, keeping up with that pace in itself is a full-time job.
I think this is actually like a perfect moment for us to kind of transition kind of over into breaking down August Digital specifically. And I know, Vera, you had a few different questions that you wanted to ask Aya if you wanted to take the realm from here. Take the reins from here, I should say.
I think maybe we have some new people joining, so if you could give a brief intro into what August is, that might be a really helpful segue into the next set of questions that I had.
Awesome.
Yeah, absolutely. So high level, August is an on-chain prime. What that means today is it's an aggregation layer for us to be able to let users trade, borrow, lend, execute in DeFi, CeFi, and cross margin all in one place. So really simple way for you to access the OTC market, the DeFi market, and the CeFi market in a capital efficient manner that's easy to use and hopefully also beautiful to use as well.
Yeah, we're really happy here at Blizzard Fund that we could participate in August's round. And I was honestly pretty curious about, given the strategic alignment that we have, the strategic advantages that you had building on Avalanche or you encountered while building on Avalanche, and just kind of particularly concerning transaction velocity, fees, or privacy for institutional users in particular. That'd be really great to hear about.
Yeah, absolutely. So, I would say Avalanche has really best positioned itself today as the institutional chain. And like I mentioned before, a lot of these conversations take a lot of time. And so I would say there's kind of twofold in that on the, partnership side of things, Avalanche has done, in my opinion, the best job in really trying to get those institutions over the learning curve of all the technology pieces that I mentioned. And that's truly, a very large lift. And so they benefited the entire space in driving those conversations. On the tech side of things, because of the way Avalanche has really positioned themselves institutionally, there's a lot of the flexibility to tailor these vaults that include, whether you want it to be KYC'd, whether you want them to touch certain assets, a single abstracted vault, and then, as you mentioned, on the fee side of things, because of the recent Avalanche C chain upgrade, the fees are also incredibly low. And so all those things make it incredibly attractive for some of these institutions.
I'm very happy to hear that Avalanche was able to kind of make its mark with institutions and that you found it quite easy and rewarding to build on us. Uh, Also curious about looking ahead, what's August's long-term vision for its role in bridging traditional finance with the decentralized world? So thinking maybe 3 to 5 years out from now, like what do you see for August?
Yeah, I mean, more broadly, I would say that our thesis is that every asset is going to come on chain. And so if every asset is going to come on chain in some capacity and get tokenized, because it's cheaper, because there's less operational overhead, because it's easier to access globally, then we need to position ourselves to provide the toolkit for those assets to be, traded, held, transferred, stored, all in a simple capacity, levered in an easy way. And so that is what we're doing today. Today, we have over 500 protocol integrations. We support hundreds of assets, all of the Oracle work to make sure that we're, pricing in the right price data, cleaning all of the back end pieces. Think about some of the reporting, right? When you, go and transact, no one wants to go into Block Explorer and have to look through that in order to understand how their transaction was processed. All of those pieces, I would say, the kind of unsexy stack of what makes a product usable and easy is what we're focused on doing. And so today, as those assets come on chain, our goal is to be that layer in order to facilitate ease of use, to make these things composable, and for you to be able to use them not just on chain, but in your day to day across wallets, platforms, etc.
Yeah, it's so interesting to hear about all these different pieces that are coming together to make all this work. And while you're, working on all of that, curious what has been the most surprising feedback from early institutional partners that you have been working with through August.
Yeah, I would say, the same thing that surprised me when I was at FalconX surprised me here, in DeFi, in that the risk appetite of these institutions to go further down the risk curve so quickly after they start to use the technology was way faster than what I anticipated. And so, I will say when we started in DeFi, everyone wanted everything to be fully, fully, fully decentralized. And I think now what we're seeing is a kind of blend of CDFI or CFI DeFi or some centralized back-end portion, some sort of control, and institutions like that because they like the ability to just be able to depend on if a mistake happens, I can, call someone or talk to someone in order to address that mistake. And so that's kind of the middle ground where we've seen a lot of these institutions play. And even if you look again at Hyperliquid, I would consider, for validators also being relatively centralized. And so, that's another area where we've actually seen a lot of adoption around this more centralized DeFi, and it also leads to a better user experience typically because a fully, fully, fully decentralized product is one, incredibly hard to build, but also if you do need to make an upgrade, it's incredibly painful to upgrade and make changes to. And so that's where we've seen, and at least has been most surprising, a lot of the appetite go in that direction.
Right. So on that topic of increased appetite and all of this, how would you say August is differentiating itself from maybe other platforms or protocols attempting to do the same thing, onboard institutions into DeFi?
Look, what I will say is, today we are the only platform where you can cross margin between OTC, over the counter trades, CFI, and DeFi. And at scale, today we do roughly 7 billion in monthly volume. And so, that has positioned us quite well in terms of being able to address all three of those verticals in one place and bringing a number of those CFI pieces on chain, which is what we're most focused on. So how do we maintain that transparency and the beauty of just using smart contracts and making things automated to decrease operational overhead and make things cheaper and faster. And so that is where we really differentiate ourselves. I would say more broadly, the beauty of DeFi is that composability is a very real thing. And so what we've seen is the space is too small for you to have direct competitors. So, for example, we have a lending arm of the business, but we also work with, all of the large lenders in the space, call it a Maple Finance or a Morpho or an Aave. We have, a trading side of the business, but we also integrate with all of the, trading platforms in the space as well. And so I think for us, it's really the aggregation layer, because again, so much of this is fragmented, and we just want to focus on how do we get the best user experience. But this is very unique to DeFi because in DeFi, you can make everything composable. So if a user, for example, is going on a lending platform and has a position there, I can use the receipt token of that position in our August platform to then be able to make that composable with something else. That is very differentiated from CFI and TradFi, because in TradFi, if you have a position with Goldman Sachs, you most certainly cannot use that for leverage at JP Morgan or another investment bank. And similarly at CFI, if you have a position with Galaxy, Falcon X is not going to give you leverage on that position. There's no way. And so, the beauty of DeFi is we're all composable. And so if the goal is how do we bring more of these financial products and users on chain, the goal is really how do we increase that composability across all these platforms. And at the end of the day, the best products will speak for themselves and grow.
I really love how you laid out the beauty of DeFi here.
Very bullish. Very, very bullish.
All of us, all of us. I want to kind of go back a little bit to how you mentioned there are different arms of the business, including in the trading arm. I know that August recently launched Upshit.fi, so that's the first app powered by August that apparently democratizes access to institutional yield. Can you explain a little bit more about that, what that is, and how it achieves that democratization?
Yeah, absolutely. So, for us, we think about August again as cross margin, as a toolkit for these institutions to get the best access to be able to run their, CFI strategies on chain. And the way we think about Upshift is the front end for that. And so, if you think about the user experience today versus, call 4, 5, 6 years ago, it back then, there were far, far less DeFi protocols, far less tokens, and far less platforms that you had to keep track of and yield across all of those different platforms. Today, it is not just a full-time job, but a full fun job in order to be able to manage all of those yield opportunities across the space. And so for us, the way that we think about it is how do we partner with the best and most talented platforms and curators to create, um, automated strategies that are run systematically to be able to give other users access to that same yield. And so it's really being able to use that same toolkit for on an institutional grade with the institutional permissions and whitelists that we have and the security that we have to be able to give users access to that. And today we've scaled that to over 350 million in TVL. Yeah, that's been very tremendous job on the team side.
On my end, I'm a little bit curious about who the specific kind of primary target audiences are for Upshift, and then what kind of problems is it kind of solving that weren't really being addressed prior.
Sure. Yeah. So on the user side of it, it really ranges. We've actually seen anywhere between, an individual user all the way to some of our institutional clients become users of Upshift. And the reason for that is, let's say that you are really a fund really focused on a specific chain or ecosystem, and you don't have the bandwidth to focus on yield opportunities on another chain or ecosystem. Then you can, really outsource that and be able to look at that on the Upshift platform. And so that's where we've seen institutions get involved. And then on the individual side, perhaps you don't have the tools or the background needed in order to run these systematically, because it does require a lot of automated algos in order to do that at scale, and on the level that we've seen some of these strategies being curated. And then with the problem that it's solving, I would say it's really just clearing through the noise. At the end of the day, because the industry has grown so much and there's so many opportunities in the space, there is so much to filter through. And no one has, you nor I, anyone on this call, really, even some of the curators that we have, has the time to go through every single one of those different opportunities and be able to underwrite, the risks on the smart contract side, the token, the opportunity itself, the liquidity, the users within each liquidity pool. And so it's how do we simplify that process and make these things still accessible so that you don't need to be someone that's trading systematically to be able to access those yields alone.
I really, really appreciate you for pointing that out too, because like it's like you said, there's way too much going on in DeFi for us to like all sit and research all of those various different categories in order to figure out whether or not we'd actually like to deposit some sort of capital in there. Something I'm actually curious about too is like what does the kind of like onboarding experience look like for, let's say, an institution or someone of that nature? It is kind of like depositing in, and then it goes into a vault, and there's a couple different vaults, or like how does that look?
Yeah, that's exactly right. So today, if you go to upshift.finance, you'll see all of the different yield opportunities. You can click into them, and it'll give you full transparency in terms of what the exposure of the pool is. And so that's really important to us, is that you get the full transparency into exactly what strategies are being run. So again, if you wanted to do the underwriting yourself, you have the capabilities of doing that. And everyone should understand the full risks of each of these before going in and making a deposit. And so that's on the primary side. On the institutional side, if you're looking for something that's bespoke, if you're looking for something in size, if you're looking to trade something across DeFi, then that's where we ask that you go through a full KYC, KYB process, and then across all of our products, we run AML checks as well.
Okay. I really appreciate you for laying that out too. And something else I definitely want to talk about is I kind of love talking about like future plans, like vision for everything. Can you talk about kind of the next steps for Upshift, or like can we kind of expect some different features or yield strategies?
Yeah, absolutely. So, Upshift has a lot in the roadmap going through end of year, but I would say, the biggest one is we want to be the platform where all of the best opportunities are found. So if you think about it like an app store or a Shopify platform, that's really the way we're trying to simplify that user experience. As you mentioned at the beginning of the call, right? How do you get the user experience to be incredibly seamless? And so that's really what we're focused on. We want to have an easy to use product that people can understand. They understand the risks, and they can use very, very seamlessly. And so the goal for us is not only building the product, making it seamless to use, but also we want to expand it so that we are able to integrate it into all of the current products that you use today. I think typically what I've seen happen in crypto over the years is that people really want to own the front end and the user, and so that leads to a ton of fragmentation consistently. And so we don't mind white labeling our products and our solutions into the front ends that people are already using today, because you don't want to have just another platform to be able to use, another UI to track, another place to go to in order to find some of these different yield opportunities. And so that's very top of mind for us, is how do we integrate into all of the service providers that you already use on a day-to-day.
And I know Vera also had some questions too, specifically on kind of like the vision. Um,
I
for
mean,
the yeah.
also, I would love to hear a little bit more about, so sounds like Upship brings that kind of yield to users, that August is built for institutions. So Have there been any frictions that you have encountered in aligning those two demands and those two sides of things?
It's a great question. I would actually say there's a lot of overlap. So typically, what we've seen is, on the institutional side, a lot of our institutional clients have turned and wanted to be curators on the Upshift side, and a lot of our institutional curators on the Upshift side have turned and wanted to be clients of the August institutional side. And so, at the end of the day, the infrastructure that's being built, there's a lot of overlap between the two, and so, that has given us the ability to give users access to institutional tech where you just really don't see that historically today. Typically, you see an institutional business running in complete silo to a retail one. You don't see that a lot of the times those two things overlap. And I think that's the detriment to, some of these other users or Upshift users because they aren't able to get the benefits of the institutional tech and there's really no reason that they shouldn't be able to do that. And so for us, it's really the ability to try to be the bridge between the two so that folks have access to both.
That's amazing. And then, since Freebie loves the vision questions, I do have a couple more. Kind of zooming out from the focus on August and Upshift, what's a belief that you hold about the future of institutional crypto adoption that you think maybe people might be still underestimating?
Yeah, I think, what people don't realize is once the institutions come and come in size, the space is going to look really different in terms of less volatility, less slippage, less yield opportunities. But it's going to have a very seamless and easy to use process and product user experience. And what I mean by that is institutions require a level of sophistication that the space just hasn't proved yet. But when it comes, and it will come, then we're going to see maybe not necessarily the kind of like 300% token launches that we still see sometimes in space, but we'll get to see a lot more integration into our day-to-day lives, which I think everyone in this industry really wants to see more of. And so, like I said, we're going to see a lot of the traditional assets, if not all of the traditional assets, move on chain because it's just cheaper to facilitate less operational overhead. We're going to see, I think Fannie Mae just announced, for example, that crypto should be considered now as collateral for mortgages. So we're going to see more overlap with the traditional wheelhouses, and as more and more of that happens, you're going to see more reporting requirements. You're going to see more auditing requirements. You're going to see a level of sophistication required on a security smart contract audit, and these are all really good things. You'll see insurance providers come out in size, and so I'm sure for all the folks who have been in the space for a while and even in the space now, the industry may, for example, lose a bit of its scrappiness, but that is a good thing. And I think sometimes people confuse the two and say that okay, the space needs to be fully decentralized or needs to have certain features and functionalities, but that is to the detriment of the user most of the time. And so how do we get the best user experience? It's really by meeting halfway in the middle, and those institutions are making those steps to meet us halfway. And so on the decentralized side, I think the industry should do the same.
Yeah, I definitely agree. Having institutions meet us halfway, that opens up the stage for that kind of scrappiness that you mentioned to evolve and just products to become better, users to have better experiences. So I love the positive outlook. And yeah, I know that, Blizzard invested already, but I learned definitely a lot today just from what you told us. So thank you for everything. And I was curious to also know, for founders or builders watching this, tuning in today, what's one lesson that you would say to them from your experience that you wish somebody would have told you earlier?
Yeah, I would say, I'll give you two pieces of advice, things I've learned the hard way in my life. The first advice is all of the best decisions are decisions that are made for you. And so, there's a lot of things that happen in crypto. Perhaps you don't win a deal or you don't win a product integration or, God forbid, a hack happens. all of these things are learning experiences and things you should learn from, and will build to a much better product. Some of the best products that exist out there today are ones that have experienced some of these things in the past. And then the second thing that I'll say is focus is everything. In an industry and an ecosystem with so much noise, it's so easy to jump to that next new thing. And so just focus on being the best at, a specific thing that you do, and the clients and the users will come to you. And once you are the best, you know, call us. We will integrate you as well, and we want to work with you too. So definitely down the line.
That's great advice.
That's absolutely amazing advice, Aya. And for everyone out there, please make sure you take that advice. And also, if you actually check this out, maybe a little bit too late and you missed some of the alpha that Aya was talking about, because Aya gave us an amazing kind of behind the scenes look into the way these institutions think, since she's working with them on probably a daily basis, hourly, minutely basis. So if you missed out on all that, please make sure you rewatch this stream, or I'll do my best to get this up on Spotify and Apple Podcasts within the next 24 hours or so. So if you want to wait for that and check it out on there, then you can there as well. And for everyone out there, actually, just for the folks who would like to follow you and follow August Digital, boom, I got you.
There we go. That's perfect. That's the one.
Right down there, my friends. Make sure you're following at August_digital and at Blizzard Fund as well. Please make sure you're following these two absolutely amazing organizations so you can make sure you keep up to date on everything that they're doing. And I'm going to give you folks a pro tip. Please come here, listen closely. All right, look. So what you want to do is you want to hit follow, and then you're going to hit bell notifications, my friend. Bell notifications. That'll make sure you get notified anytime that they decide to post anything, and they're going to be posting a lot. A lot of alpha, a lot of information, and that you want to stay up to date with. So please make sure you're following at August Digital and Blizzard Fund with the bell notifications, my friend. I'm going to end this thing with like a very, very simple word, and I think everybody knows this word. It is simply peace, everybody.
Thank you.